to reflect on all of those from the Dubai side and DFM side. When it comes to the private companies listing on the exchange, we are so happy that we had the world's biggest tech IPO list in Dubai, Talabat, which creates a template for many other Talabat-like companies to come and use the market. When it comes to the investor composition, we closed the year last year at 50% international activity on the market. We welcomed 136,000 new investors onto the market. 86% of them were from outside the UAE. And if we take that momentum and we look at this year, quarter one, our international activity went up from 50% to 53%. Institutional activity on the market went up to 72% from 65%. If I look at the index for the first quarter or until year to date until May, we're at 3.6% up. This is on the back of 27.1%. So the majority of the discussion was around how can Dubai maintain this growth, what were the ingredients around all of this. And then there is the macro that could potentially end up either creating an opportunity for Dubai or could be a challenge for some of the companies that are related to Dubai. And the theme around that ends up being around, we do have an opportunity, we need to maintain the same focus we've been maintaining for the past 3 years, be it the capital market reform program or the D33. Because what the world needs today needs the agility and the focus to execute on plans and create an environment where businesses grow at the end of the day.
So let's talk about the macro because you mentioned it. Oil prices now at their lowest level in about 4 years. Are you concerned about the impact that could potentially have on the capital markets?
I think for Dubai, very little impact when it comes to oil. And I think the sentiment, because the economic participants have this association and sentiment related to a high oil price or lower oil price. And we'll have to go through that sentiment period before we end up adjusting our plans. But in terms of material impact on the economy, we're not dependent on oil. We've diversified away from oil long ago. And as long as we see companies, and companies ends up seeing companies grow out of Dubai, that gives them the motivation that your growth is not always related to how the oil price is performing. And the fact that oil price is down, considering that the consumption among the world's two biggest economy is expected to come down, which is 60% of the world GDP divided between US and China.
How do these global concerns like the US-China trade war impact the consumer spend and investor sentiment on the ground here in the UAE?
I think if we look at the investor sentiment, if you're an investor, you're always looking for opportunities on the market. The way we adjusted that is we start looking at how do we end up creating opportunities for multiple strategies, be it long-term strategies, medium-term strategies, and short-term strategies. The mix of investors on the market today gives us the ability to present 3 pillars of opportunities and for them to end up uptaking on the market. And we've seen that in the first quarter of the year in terms of engagements. We're up about 30% in terms of the average number of transactions per day. We're maintaining a 67% growth relative to last year. If we were to compare the last quarter of 2024 with the first quarter of 2025, we're up 27%. If we do that comparison with the entire year last year, we're up 67%. So what we're focused on is that level of understanding that investors, while they recognize challenges, they also want to see opportunities on the market.
Dubai has a goal to be a top 4 international financial center in less than 10 years. How do you get there with the competition that we're seeing, not just domestically, but regionally and internationally as well?
I think let's start with the international part. What we've been seeing an evolution when it comes to how different financial centers have performed, especially post-COVID. Some have not done so well as expected. They generated an outflow. We spoke about that in previous discussions between the two of us. And that has helped Dubai in terms of capture some of that outflow from some of the key international centers. So that's one pillar that's creating growth. But then there is what we are doing right here in Dubai that's generating quite a lot of pull effect from different jurisdictions around here. And that places us as a comparable international jurisdictions in the region. anything that happens that involves, from our neighbors, that involves reform when it comes to policies, harmonization of regulations, is something that's good for the region. We started this about a decade and a half ago. We recognize the importance of all of this. To see our neighbors follow similar template in terms of harmonizing the regulations to better interface with international jurisdictions is something that's good for the region. The choice in terms of where asset managers and financial institutions will spend their time relates to a number of other factors beyond regulations, which is infrastructure, access to talent, relevance of policies, responsiveness of the government, and to what extent there is connectivity between my new jurisdiction relative to the neighboring jurisdiction. So connectivity is very important.
And do you think that's enough to compete with other major financial centers like New York, London, Singapore, for example?
I think in terms of achieving that growth, so the idea here is not for us to end up competing with leading financial jurisdictions. The idea here is to have a projection into the future. What is it that matters? And the world has taught us in the past 5 years that the template that worked for you for the past 10 to 15 years will not necessarily take you into the next 10 to 15 years. It might take you there for the next 3 to 5 years. The agility that you have is something that's far more important. So we're in a race, and we used this analogy before. And what's important for us is that we maintain a sustainable speed that gives clarity to those who are influenced by it, which is the wider economy. We have a clear vision. We're committed to it. And I think it's worth a shot, given that we are given a very unique opportunity post-COVID.